Hello traders, Gary Wagner here. Just before 12 noon in Honolulu, 6 o'clock in New York. It is Wednesday, the 6th day of February, 2019, and this is the Daily Report for gold and silver. Once again, with the exception of palladium, we do have the precious metals complex lower across the board, with gold trading off by almost 0.7%, currently down $8.90. And currently fixed at 13.1030. That, of course, is April futures. Silver down a little bit stronger, down over a full percentage point, back below $16, a decline of about 17 cents, and currently at 15.67. Platinum down almost a full 1.5%, close to breaking below 800, down $11.90. and currently trading at $808 an ounce. As I said, the exception continues to be palladium. Palladium up about $4, $3.90 at 13.4510, maintaining its position as top of the heap or top tier precious metal in the complex. Now, that is all with some pretty strong headwinds, and those headwinds are provided by dollar strength. Dollar strength accounting for about half of the sell-off in gold today. A dollar is back above 96 at 96.16. That is a increase of about 36 points or almost 0.4%. When we look at U.S. equities today, they were across the board lower, but nominally lower. A 21-point decline in the Dow, 25,390. The NASDAQ composite down, but down about 0.4% at 73.72. And lastly, the Standard & Poor's, this is the E-mini, at 27.28. So traders, on today's show, I do want to start once again with a weekly candlestick chart. And the reason that I want to look at the weekly first is that we have a key level of support which has been broken today, and that key level sat at around $1,312. Now, that is based upon a very, very long data set when we consider that we're looking at a price point which begins back at the end of 2016 when gold was trading at $11.24 and runs up to approximately $13.70, and that is the highs that we reached multiple times last year as well as the year prior to that, and that would be this attempt right here. So that the fact that we broke through the 0.23% retracement level to me is significant, and it bodes the question, how low can gold go? And to really answer that question for you, as we did yesterday, we really have to look at another chart, a daily chart, in which we're accounting for the last leg of this rally. Now, considering that this rally started in August, gold is trading down here in the 60s, 1160 and change. From there, it runs up to about 1246. This, I believe, is what we're calling our wave one. We had a pretty deep retracement in wave one to wave two. And for that reason, I'm more inclined to look at a shallow retracement for this current correction. Because typically on your wave count 1 through 5, one of the corrective waves, either 2 or 4, is going to be shallow, and the other one typically tends to be deep. Now, that's not always the case, but it is the majority of the time. So the fact that when we look at this correction in comparison to the move itself, what we can absolutely see is that it is a pretty deep correction. And so for that reason, what we want to look at this point is simply the price points from about $1,200, and that is where the second leg really started, and the third wave began moving up to these highs at 1330. And traders, to do that, we have moved back to our daily candlestick charts. I do have two separate fib retracements. The first and most important one that we want to look at is the one that covers this leg of the rally, which is simply about $1,200 to $1,330. The second fib retracement that we have starts at 1370, as do the other ones, but the low comes to the beginning of the rally at 1167 as opposed to going back to end of 2016 when the market was at 1124. So the numbers are a little bit different. What we're going to look for is harmonics within there. We also want to pay very, very close attention to where the current moving averages are, the 50 and the 200-day moving average. Now, we've already had our golden cross, and that's the point in time in which you get the 50 crossing above the 200. You can see that the market at that point was at around 1279, and that was really one of the precipitating factors that moved the market off of these lows up onto the highs that we hit at 1330. Now, once that's in place, we want to look at potential areas. And now that we have broken through $1,312, the most logical place to look at is twofold. First, it will either find support, I believe, at approximately 1,300, 1299.80. That is the 0.23% retracement. Or if it goes a little bit deeper than that, it would go to about 1280. And the reason that I'm looking at 1280 as having a higher degree of probability than the shorter 0.23 is that we do have a real strong data set that comes in showing that this was an area of support, and it also occurred right before that big bounce up. So depending on how this market wants to trade over this next week to 2 weeks, we want to see if it continues lower. Will it hit 1,300? I believe that there is a strong potential that it will. And traders were only about $10 away from that point. However, if it breaks through there and does not find support, I would look at 1280 as the conclusion of the correction. Therefore, traders, maintain a current neutral stance with no active trades, looking for a proper point to enter. Of course, aggressive traders can go short this market, but right now your short might only give you about $10 if gold finds support at around 1,300. However, if it does go to the 0.38 level, and then you're looking at the potential of about $30 more of a move to the downside. We are going to err on the side of caution and maintain a neutral stance. Look to see if this market trades lower, how it reacts at 1,300, and if it finds support, we'll know that's a good area to go in. If it breaks through there, we'll look at about 1,280 as our potential entry point. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.